If you want to build wealth, the standard playbook is everywhere. Buy a rental property, pick up some acreage, park your cash in index funds, and let compounding do the heavy lifting over the next few decades. Two people can follow those exact same steps to the letter. 30 years later, one retires with a modest safety net, while the other sits on a multi-generational fortune. The difference isn't the market. This compounding equation is the actual engine of wealth creation. Real estate, farmland, and stocks are simply vehicles. The real multipliers don't live on a balance sheet. They are your seed capital and biological operating system, your intellectual and physical capacity. Focusing purely on market assets while ignoring your own human capital places a strict, artificial mathematical ceiling on exactly how far your money can go. Let's look at the principal variable, the seed capital you put into the equation. That number is dictated entirely by your ability to generate income through skills the market values highly and cannot easily automate. This chart breaks down a standard earning scenario. Take someone earning $50,000 who saves 10%, leaving $5,000 to invest annually. Now look at the second bar, a person mastering a high-income skill. Earning $300,000, they comfortably save 20%, generating a $60,000 annual investment. That's 12 times the starting capital, meaning the compounding engine fires 12 times faster. Run both contributions at a 10% annual return over 30 years. The growth curves pull apart instantly, resulting in an $8 million gap by the end. Mastering disciplines like complex sales, software development, or leading large teams gives you enormous leverage. The ceiling on your earning capacity rises continuously, the sharper those skills get. Mastering high-value skills is the primary financial strategy that dictates the volume of your initial seed, long before a single dollar enters the stock market. Then we have the time and rate variables. This is where your biological health functions as a literal financial instrument. This timeline illustrates a massive disparity in life expectancy across income levels. Individuals sitting in the top 1% of income live on average 14.6 years longer than those at the bottom. In the context of compounding, an extra 14.5 years is enormous. It tacks on a full decade and a half of terminal exponential portfolio growth, right when the numbers are at their largest. Physical health also influences the rate variable. Your biological state dictates the cognitive sharpness of your brain, which directly impacts the quality of your daily financial decisions. This graph plots physical activity against income, revealing that physically active individuals earn 17% more than sedentary peers. Add to that a compounding career benefit. Fit people are 44% more likely to receive promotions, accelerating their trajectory. This cognitive disparity changes your actual yield. An exhausted, inflamed brain perceives a high return opportunity as a risk, whereas a sharp, optimized brain identifies the arbitrage and seizes the upside. Neglecting your physical state erodes your compounding window and lowers the potential yield of every decision you make. Holding only half of this human capital formula leaves you stranded. High-level skills paired with failing health lead straight to burnout. Excellent health with no market skills leaves you with plenty of time, but zero seed capital to compound. A truly optimized portfolio prioritizes internal assets over external vehicles. It means treating cardiovascular health and skill mastery with the same seriousness as analyzing a real estate deal or a quarterly earnings report. The clock on your wealth creation does not start the day you open a brokerage account. It starts the moment you actively optimize your own biology and build skills the market demands. Master your internal, intellectual, and physical assets first. Once you do, the external financial markets will inevitably accelerate the wealth you have already built.